This video is an Uncovered Japan Company research report on Tadano Limited, ticker 6395. Tadano is one of the world's leading mobile crane specialists, built around the Tadano and Demag brands and expanded through recent acquisitions. Its global service network and aftermarket are real strengths. The central question is whether those strengths can turn record revenue into durable returns. At the report's July 2026 reference date, Tadano traded at 0.77 times book value and a reported price-to-earnings ratio of 8.65 times. But the report normalizes earnings closer to 15.5 times because FY 2025 net income benefited from one-off gains. The equity ratio was 44.9%, while operating margin was 5.3%. The two central swing factors are Europe returning to profit and a stronger capital efficiency response. Tadano is fundamentally a lifting equipment company. Construction cranes were 59% of FY 2025 sales. Truck-mounted cranes were 12%, aerial work platforms 9%, and the new material handling business adds fixed equipment for ports and shipyards. Parts, service, and used equipment made up another 19%. The product breadth matters because customers buy uptime over a long machine life. The financial chart shows the tension in Tadano's FY 2025. Revenue reached a record 349.5 billion yen, up 19.9%, while operating profit fell 22% to 18.6 billion yen. Operating margin dropped from 8.2% to 5.3%. Acquisitions, price increases, and a weak yen lifted sales, but acquisition costs, lower margin mix, and U.S. tariffs weighed on the operating line. Reported net income nearly tripled to 18.3 billion yen, but it is not a clean measure of earnings power. Below operating profit, Tadano recorded a net one-off gain of roughly 7.8 billion yen, mainly from fixed asset sales, and the tax rate was unusually low. The report estimates normalized earnings closer to 10.3 billion yen, or about 81 yen per share. That is why book value is a more useful valuation anchor here than headline PE. Regional profit makes the investment case concrete. Europe, which includes the Demag business, improved from an 11.5 billion yen operating loss in FY 2024 to a 3.3 billion yen loss in FY 2025, but it is still loss-making. Japan earned 20.2 billion yen, and the Americas earned 2.5 billion yen, down as tariffs and costs increased. Europe reaching break-even or better is the largest company-specific lever in the story. Tadano's competitive advantage is not a blanket ability to charge any price. Chinese manufacturers compete aggressively at the low end, while Liebherr leads the super heavy end. Tadano's advantage is coverage, a broad crane and lifting equipment line, combined with the Demag brand and a global parts, service, and dealer network. Its 66 billion yen parts, service, and used equipment line is an aftermarket annuity and a reason customers stay with the platform. The balance sheet issue is inventory. Tadano carried 157 billion yen of inventory, equivalent to 223 days of turnover, in a high-mix and long-cycle production model. That helped drive operating cash flow to negative 2.4 billion yen in FY 2025 and free cash flow to negative 15.1 billion yen. The report's forward model expects cash flow to recover as one-offs fade and working capital normalizes. But inventory discipline is the key execution test. The market is mature rather than structurally fast-growing. Tadano's own data puts global mobile crane demand at 15,970 units in 2025, essentially flat year-on-year. Recent growth has come from acquisitions, price increases, a weak yen, and the Middle East boom. The Manitex acquisition brought in truck-mounted cranes and aerial platforms in North America, while Tadano Infrastructure Solutions added fixed cranes for shipyards and ports. These moves widen the portfolio, but they also add integration work. At 0.77 times book value, Tadano looks inexpensive against the broader machinery average of 2 times book. But its crane peers also trade below book, because the sector is cyclical, capital-heavy, and low return. Tadano is not simply the cheapest crane maker. The valuation discount closes only if profitability, particularly in Europe, and capital efficiency improve. A low multiple is the starting point of the research, not the conclusion. The report's 3-year scenarios range from 802 yen in a bear case to 1,593 yen in a base case and 2,817 yen in a bull case, against a July 2026 reference price of 1,252 yen. These are the author's estimates, not price targets. The base case assumes gradual margin recovery and Europe near break-even. The bull case needs stronger European profitability and a capital efficiency reset, while the bear case combines weaker demand, tariffs, and renewed losses. Tadano combines a real global lifting equipment franchise with a sticky aftermarket and a balance sheet still sturdy enough for a cyclical industrial. The risks are also visible. Europe remains loss-making, inventory is heavy, global crane demand is mature, and tariffs, FX, and Chinese price competition can all pressure margins. The useful scoreboard is straightforward. European profitability, inventory and cash flow, pricing and tariff effects, and management's response on returns and capital efficiency. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security.